Hey, let's see it in the chat. Come
Live,
on,
baby.
shout out.
It's good to see you all.
Music. Mac and Bees is always in now. Good to see him. Anything goes. Oh, Diaz says, I miss you, Arthur. He's such a nice gentleman, that Diaz. I believe I've got an advert come up, boss. What's going on? Got me. X-Pulse RNX. Got Rennie. Adam Frank. LF. Dr. McLovin. Katie May. Yvonne Carnes. T-Zone 671. Luke. Sandra Narman. Lizzie. Mr. Vato Loco. In the house. Leo.
Cheers.
EJ. The Collector. Nice. Greg Lane. Nice to see ya. Zachary D.A. Wow. All yours, mate. All yours.
You're the man. Thank you very much, Wolfie. Hi, everybody. I'm Marcel, the Butcher of Wall Street. This is my friend Wolfie, and I'm hanging out here with everybody in the think tank. We've got a huge group here on YouTube as well. I'm super happy that you guys could join me. Puff Puff Pass. I see you guys in the chat there. Don't think I don't see your comments. Sorry, we're running a little bit behind. That's why I don't like to pre-schedule streams, because we are all busy people. You know, being a YouTuber is not a job for me. It is more of a hobby that I think we all took up because of the fact that we were disgusted seeing people get smashed in the current market situations, equities all around the world, real estate and so on. That being the case, I want to say thank you to each and every one of you, all of our 23,000 plus subscribers. Appreciate you for taking the red pill like the Matrix and getting out of the damn Matrix, because people need to open their eyes a little bit. And part of this stream, well, this stream is the next in a series exploring the financial and macroeconomic implications on global financial markets by over-leveraged hedge funds and central banks. Let's jump right in. I am taking a look at my account right now, at one of my accounts, and seeing 8,001 shares of AMC on this particular account. That I'm currently down about $31.1 thousand, and I could not be happier. This is an incredible buying opportunity for me. I don't know what you guys are feeling, but Ape, I have 3,878 shares of that in this account, and a handful of call options as well.
I'm feeling like I'm averaging down.
I think that's a great idea. So I'm using my other account here. I'm holding 2,500 call contracts of AMC1. And I don't think that's enough. Nah, it's not enough, man. These things are going for 4 fucking cents. Are you kidding me?
Those are rookie numbers. You got to pump them up.
Okay. I think I will. Thank you, Vivian. The ask is 5 cents on these fucking contracts right now for January 20th, 2023. $145 strike. That is pretty decent there.
That's an amazing deal.
5 fucking cents.
Very kind of him.
Oh my God.
It's hard to believe this is real life.
Cheers.
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 Smoke them if you got them. I am looking at my AMC ones over here. We've got the ask at 5 cents. I'm going to slap that ask. And I think I'll buy 100. Now, I think I'll buy 500. Nope. I think I'll buy 600. Nah, 700. Let's go for 800. I think 800 is a good
round number.
A good round number. That'll be about $4,528 with 36 cents. $520 in commissions, $8.36 in exchange fees, and $4,000 if they fill.
Wow, they made this one.
Order received. All right. Let's see how that goes. 2,500 call contracts for B is not enough. If I can't sell a bunch and exercise thousands of contracts for hundreds of thousands of shares of AMC and APE, I'm not interested. That's just me. I don't buy puts on AMC. Well, I have in the past to make profit to buy more calls. But no, I have no puts on AMC. No, sir. So let's see what happens here. Take a quick peek at our order. Are we open? No, we just filled. We filled on this contract, as well as, you know, the others. AMC won $35 calls that I bought yesterday, the VIX calls that I bought yesterday, the PayPal puts that I sold yesterday for a nice profit, and the AMC 1 calls that I bought on the 10th. I got 800 more calls, baby. That's what I'm fucking talking about. So, I think that puts me around 3,300 call contracts on AMC 1, just in this one account for this one strike.
Damn degenerates.
I know, right?
Shit, just keep talking dirty.
It's just not enough.
Nah.
It's not enough. I have 3,300 call contracts with a cost basis of $34,092.02 currently on AMC 1 for this strike. AMC 1 basically would pay, if I exercise, would, aside from the premium that it would pay if I happen to turn a profit on them when AMC runs and APE runs, would be 100 call contracts of each AMC and 100 of APE.
I love it.
I'm very much looking forward to it. I've also holding quite a good amount of VIX call contracts, volatility index call contracts, which are up 14, 32, 46, and 94%.
I might be as well.
Yeah. Oh, you can't see it there because my face is in the way. Let me scoot that up there. There you go. It's the percentage gain on those. It's pretty nice. I think that's got a long way to go. And I just want to say thank you to everybody for your support. The Think Tank, I see you. Thank you very much, Hilsey. Thank every single one of you guys. You're amazing. Grandpa Barney, thank you very much, my friend. You're too kind. Please stop super chatting, you guys. Like, we really appreciate you, but please stop. Thank you very much. Thank you. Looking at this, we're currently looking at the Bank of England warning households may face a strain similar to the pre-2008 crisis. In addition, the Bank of England yesterday said that they were going to stop buying and bailing out the bond market, the gilt market, GILT, the United Kingdom bond market, on Friday. What are your thoughts, Wolfie?
Again, mate.
We got the Fed bids going.
The bond market.
Yeah, the Fed bids here in the States, 10-year notes are zero. Absolute garbage. Nobody's bidding on the United States bonds, nor the United Kingdom bonds at this point.
It says to me, nobody else outside of them countries have got confidence in what's going on in them. They're not buying the debt off the governments. That would be a worry to me.
I think so, man. You know, I wanted to ask you if you could proceed with one of your infamous speeches, because I'd definitely love to hear it right about now, my friend. You're gonna make you're gonna make me FOMO into another 10,000 shares of AMC.
don't know that I want that responsibility because you can only get so rich. Billions with an S is big enough, yeah?
Maybe. It depends on
I
if we
got a
need to make
couple.
our own market maker to compete with Citadel and Virtue.
Mate, you'll start your own business, lit. That's what we need. That's what we're waiting on.
That's what we're
Take,
doing, my friend, with a broker-dealer, lit exchange.
yeah.
And if the SEC
Take,
keeps coming out with regulations like this, we might have to make our own dark pool. A dark pool that only routes to lit markets. A lit
I
pool.
know.
Lit pool.
Exactly. So,
I got a few that I can do today. I've seen,
go ahead, Wolfie.
you know, I pay attention. I don't always comment, but I'm in on the Twitter, as people obviously should know by now. I like to talk. I'm seeing people chat. Somebody put in the chat, apologies, don't remember your name, but, you know, space calls and arguments. I've been here since January of 2021, so... And I'm 51 and I've seen a lot of arguments, so we might talk about that later. But just to lift it a little bit, hopefully it will lift you anyway. But, you know, I'm looking at the price, same as the rest of you. I'm not phased. You do you, I do me. But, you know, let's talk about something else a little bit better.
Yeah,
So,
brother.
I wrote this a little bit ago. Whilst the world was sleeping, we were wide awake. We had our boss, Marcel, explaining the pain the sleepers would take. We didn't tell them what to buy or how to spend their money. We just explained where to look. We never found it funny. Mainstream media and all the suits told you all was fine. Just like the build-up to 2008, it was only a matter of time. So now, a year or so later, we have done all that we are. The time is now upon us. The market's all now unstable. We take no satisfaction in knowing all we explained is becoming true. We will never forget or ever gloat that we told you, we told you, we told you.
Oh,
Wow.
I kind of like the other one better, but you know, when you're sitting there and you're just waiting for the hedge funds to die and the prime brokers to be held accountable and the CEOs to be up in court, what else is a man to do but sit down and put pen to paper and just express themselves? I prefer the other one about DFE and Burry, but
I want to hear it, brother.
this week.
I want to hear it.
Hang on a sec. I'm glad you asked. No further ado. DFE and Bury C, how it would devour thee. Underpriced, misunderstood, the buy removed by Robin Hood. We saw the shorts for what they are, the bets they placed, our battle cry. DD made, faxed, then checked. They all believed in what came next. The highs, the lows, FUD would grow. Sell you apes. Apes said no. Lies and tricks, smart money knows. Use mainstream media, the story shows. But here we are, 1 year on, we still hold together strong. The apes have grown, the float they own, they realise now the truth will be known.
That's right, baby. The truth will come out. Stacks McGee brings up a great question. He says, looking at the options chain, shouldn't the AMC1 options in the money price be based off the combined price of AMC and APE, since it's indicative of the underlying both stocks? Yes, the AMC1 basket derivatives, the options contracts, are based off of the implied volatility and the price of what derives that basket, which is 100 shares of each APE and AMC. Therefore, this price, in my opinion, and this basket of derivatives is one of the best things I've ever seen in my life as far as gambling on the stock market. Because no matter what anybody wants to tell you, whether they're buying calls on the indices like the SPY or whatever, or buying puts, it's all speculation, it's all gambling, and nothing is a sure thing. A lot of people think that they're doing a great job making their 10% returns over the last 10 years during the bull market, and they're going to realize it's a lot fucking harder to make money in a bear market. Unless unless you know what you're doing. And there's a lot of stocks that run inverse to the bond market, the real estate market, the equities markets. You trade futures, futures options, all sorts of things that a lot of people never even bother delving into. And the fact of the matter is, when the SPY crashes, the VIX goes up. And that's why there's been so much naked shorting on the volatility index and the VIX. That's why there's been so many swaps on currencies in order to boost and reduce the prices of certain currencies, thus creating volume trading in a positive fashion on the SPY to by the plunge protection team and other parties involved in order to prevent the markets from collapsing. But this can only be done for so long. During utter market turmoil, they will not be able to continue to do so. Just like in 2020 when the market crashed, and 2015 and 2011, and the 2008 global financial crisis, and the 2000 dot-com bubble, 1987, and going all the way back in all the market crashes every 7 years, just after the Shemitah, just after, I'm not even going to get into the full moon cycle with you guys yet, but basically this looks like it's going to be much, much worse and much harder than 1929 ever was on this country. From the stock market to real estate to global equities of all sorts, including bonds, we are in for a global depression. And the fact of the matter is that it's highly, highly likely that there's liquidity crisis, as we've seen. The Bank of England is bailing out their bond market and trying to save the pensions, and they're only going to do this through Friday. British pension funds pressed the Bank of England to extend bond buys amid a crash scramble. This was updated 44 minutes ago by Reuters. UK pension schemes are racing to raise hundreds of billions of pounds to shore up derivatives positions before the Bank of England calls time out on support aimed at keeping them afloat, which is supposed to be Friday, October 14th. These guys are scrambling. I'm not a financial advisor, and this is not financial advice. This is but one domino. Just like Evergrande, just like executive orders, just like phase 6 and phase 5, etc. They're all dominoes. And they will speed up and accelerate until the inevitable happens. And inverse stocks will run. There will be margin calls. There will be margin defaults. There will be collapses of pensions and bonds of all sorts, gilts, stocks, hedge funds, prime brokers, family offices, even broker dealers, possibly Robinhood, possibly IBKR, possibly Webull. Nobody knows. This is just speculation and not financial advice. But 7 of the past 8 bond auctions have tailed. And the 10-year yield auction stops at the highest yield since 2009 as foreign buyers flee, even according to Zero Hedge, posted just 55 minutes ago or so. The Federal Register here shows us that the SEC is proposing, the exchange, not the SEC, the exchange proposes to delete references to do not route orders and sweep orders. As discussed in this routing filing, the exchange is eliminating these order types. For do not route orders, eliminating is an order type and describing these instead as a routing strategy in order to align with their current offerings. That being said, a do not route order is a market or limit order that is to be executed in whole or in part on the exchange only. So what this means is it appears the Securities and Exchange Commission, as this was published on October 4th, and it looks like this notice was filed on October 11th, 2022, stating that it is a NASDAQ MRX notice of filing and immediate effectiveness of proposed rule change to amend its rules in connection with technology migration to enhanced NASDAQ functionality. Excuse me 1 second. I'll take that later. But as you can see here, this is what we were just looking at. The exchange proposes to make these corresponding changes in these certain sections. They propose to delete references to do not route orders and sweep orders in options 3, section 7, and reserve those rules. In order to align with BX's current offerings, they are eliminating these. It says orders may be entered on the exchange with a routing strategy of find or search, SRCH, or in the alternative, an order may be marked do not route as provided in options 5. So it appears as if they're not entirely removing their ability to do so. But it does seem like the SEC, this filing stating that the orders, it's no longer going to be an order type, it's going to be a routing strategy as provided in these through FIX only. So we definitely have to look more into this and see what is happening here and what's occurring with these. But it looks like that if anybody's places a do not route order or placed on the exchange limit book, it will be automatically canceled. It's kind of crazy when you think about it. Oops, wrong one there. There you go. You can read that a little bit better. So this is on the Federal Register as of October 11th. You guys can find it by Googling this, for example. And I have looked into Tom Zuzzolo, and I would like to give him big credit for sharing this information with us. But it doesn't necessarily seem as if it's as bad as one would think at first glance. Granted, they are removing the proposed changes here to hang on. They're eliminating these order types, but as further discussed in the filing, they still provide them routing strategies. Orders can be entered on the exchange with a routing strategy of FIND or SRCH, or in the alternative, an order may be marked do not route as provided in this section through FIX. So there will still be opportunities for pensioners. Sorry, I read the word I was about to look at. There will be an opportunity for orders to be routed direct to lit markets. It doesn't seem to be the end of the world. However, it does seem like cleaning up is taking place. I'm not sure the exact reasoning for this, and if anybody understands better, please let me know. But there's only been 281 people that have viewed this so far, as you can see here. So I was just trying to move my screen for you. So we do need some people to delve into it and read it even more in depth, because I've already read it a couple of times, but not all the way through, as it is extremely lengthy. So if anybody has time, I will actually drop it in the chat, drop it into YouTube and Twitter and all that good jazz. And you guys can, share it around. Sorry that this is just flying right now. Give me 1 second. This chat is flying. I just dropped it in the chat. I'll put it in the comments as well. Share it with people. See what their thoughts are on it and get a really good understanding of what's going on. I will be sharing this with my attorneys. I will be sharing this with my partners. And we'll be taking a deep look into what's going on here. But the fact of the matter is that there's a lot of changes happening on the stock market by the SEC, as well as the crypto markets and the CFTC as well. So we need to stay on top of them as far as I'm concerned. We being just retail investors, and I'm mostly speaking for myself and those people that are interested in doing their own due diligence for the reasons of being a better trader and investor, period. So I think it's extremely important for people to look into these things and understand the changes that are happening around them instead of just flying blind into the market without having any understanding of what's going on around you. You know, that's why we're working on, my partners and I are working on Lit Exchange. We are still in the FINRA filing processes. So there has not been any certifications issued yet, and that's okay because this is a very delicate thing that we are working on here. And we are in the works of getting accepted by FINRA as a broker-dealer. When that occurs, I will be more than happy to share with you guys. But I believe that it's time for retail to have an actual say in what's happening. And we are currently accepting sign up for beta testing. This is not a solicitation or offer to buy, sell, or hold any security of any kind in any way. However, this is simply an invitation to sign up to be applicable, to be reached out for our beta testing program so that we understand if our systems are properly working, much like a beta testing in a video game. Very similar thing. We hope to offer stock and crypto trading with wallet support once we receive the proper certifications from FINRA and the SEC, of course, and all the regulatory bodies. Our hopes are to route 100% of orders to lit markets, to empower retail investors so that their actual money makes a positive impact on price discovery and market equities in which they're invested. The idea is to have more transparency, better price improvement, and the highest quality user interfaces, charts, and educational tools to empower these retail investors, such as myself. I'm not a financial advisor, and this is not financial advice. This is not a solicitation to buy, sell, or hold any securities of any kind, in any way.
I can't wait.
We will soon be announcing a founders program as well, in which we will likely be reaching out to investors, retail investors, to see if they would like to be a part of that. We will never sell or give away any of your email address or personal information whatsoever. That being said, shifting away from Lit Exchange and back into my own personal account. This one is my Schwab. I could not believe that these $35 call contracts for December 16th were going for so damn cheap. They're currently like 8 cents if you split the bid and the ask. So I think they're going for like 14 cents currently on the bid. And the January 20s, 145s are going for 5 fucking cents, which is amazing, in my opinion.
Unreal.
And I think people need to understand that trading options is extremely risky. You could lose every dime you have invested in options contracts, period. If you don't understand what you're doing, you need to seek a financial advisor or guidance from somebody who can properly help you. I am not that person. I am not a financial advisor. I am not here to tell you what to buy or do. I am simply sharing my experiences, and I think in a few months, I'm going to be pleasantly rewarded and surprised. That's why I think we're gonna be so motherfucking rich.
Healthy rich.
10-year notes totaling absolute zero. Unfucking real. Unfucking real.
Inevitably rich.
Inevitable. You guys seen the bank
can't
derivatives?
help
Shit. Go ahead, Wolfie.
I can't help but think, with everything I've been looking at and stuff, that we're so close. I've even put my heating on.
Yeah, man, they're goddamn well falling apart.
My grandkids ain't even spending their money on sweets no more at this price. Hedge funds are fucking crazy. Got a bit of a rant if you got time in amongst everything you're doing.
By all means, go ahead, bro.
So you touched on a really important thing. I've talked about, I don't know how a plane works. I get on it lands where it lands, and I get off and I'm happy. You know, some people do need to know. And that's why, especially after the play, but for so many people, it is important that we know rule changes, and we should all be playing a part. We're all better educated and learn so much. But I'll come at this originally anyway from psychology, from people, things that I've learned over years and things that I've done, people I've been involved, observing and watching mainstream media. But so I've always used psychology for the play people, who's in it, who's not in it, why would they be in it, what motivates them, my own faith in people because of that, and then a few facts that over time has built to a lot of facts. But if we go back to the beginning, January 28th, 2021, mainstream media highlighted GME running up. I heard it on the radio, you might have seen it on the telly. So the experts in the suits were panicking, and the buy button was then taken away, and Reddit and Twitter and social networks were all over it. You know, young folk, people that were already involved, they were all over that. If you looked at DFE, in the beginning, he was ridiculed right at the beginning. Not when it ran up, right in the beginning. DFE was ridiculed or ignored. He had people that, you know, saw what he see and stuff, and they did their thing, their own DD, and then they did what they felt appropriate. Fair play to all of them. He's a legend.
Yes, he is.
But the word was spread by the masses. It was mainstream media covering that on the telly or the news or wherever you heard it. And that did catch a lot of people's attention. And this is where I came from, because it caught mine. I knew about VW in 2008 and 87 and lots of things. There's a lot of us. But a lot of people were already waiting for an opportunity. And then when they did see GME, might have bought it straight away or quickly looked into it, or because Reddit was being mentioned, jump on, and the numbers did grow. We all know that. So people did come in and start seeing what people were saying and where to look, and off they went and did their own DD and made their own decisions. But this is all about positivity. This is all about why I'm so strong in my feeling, why I'll never sell, and why I think others are in a similar position. So when the arguments happen, you know, if you're on Twitter at the moment, someone raised it in the chat, and they were saying about, you know, and I've seen it, good, really good people, but they say everyone is rowing. Well, we're not rowing in the Discord, and I ain't rowing with anyone, so it's not everyone.
Nah.
So it's a perspective. And when I ran a
Zen.
union back in the day, I'd have individuals come up and they'd say to me, everyone's saying. And I'd say to them, who's everyone? Because my job was to know what everyone was thinking and saying, what they wanted, because that was my job, represent what the majority wanted. But when they'd come up and they'd stay in there and they'd pump their little chests out and, you know, pretend like they knew everything and they were the smart ones and everyone was talking to them, they'd say something. I'd say one question in reply. Who's everyone? Oh, everyone, you know, everyone. So when I see it, it reminds me of that. I'm not having a dig at anybody who's put it up. Everyone's arguing, you know, drama again. But I wanted to touch on it to why I don't get excited about it, why it doesn't particularly bother me. And the lesson is from Bitcoin, of all things. Because everybody knows about Bitcoin. You might not know how it works and that, but you know it was what I'm about to say anyway. So we shouldn't dismiss that journey Bitcoin had. It's very similar to what we've been going through and what we're dealing with. But the impact it created on people's psychology, because one way or another, it was a lesson learned by everyone around the globe. We was all told, the perception became, we've missed it. We couldn't, buy it when it was so cheap. You paid 10,000 Bitcoin for a pizza, for instance. So a lot of people think they missed the opportunity. And then on top of that, they also remember that it was the same experts, the suits, mainstream media, governments around the world that were spreading FUD, and they were using all mainstream media channels like they always do. And it didn't matter whether you was a Republican, a Democrat, Conservative, a Liberal, where you was on the planet, all the different channels representing your particular field or where you associate, they were all saying it was a Ponzi, it's a bubble, it's a tulip. Now look at it. Well, people remember that. Lots of people remember that. It was an opportunity that ended up maybe missing. A lot of people didn't know. So how many people globally see that about GME on the TV or heard it on the radio, and they were already motivated to pounce? They were already pissed off with everything that goes on. They already had their eyes open and stuff. People that weren't using social media or watch YouTube, etc. So if you go back to DFE and look at him when he was in early 2020 and how many people were actually responding, Boss gets 100 times. After everyone went back and watched the videos, etc., and the numbers grew. And there was some with quite high numbers, but Boss kills it. There's a few of Bigham's numbers kills what DFE had until it run, and that's important for a little bit later. So people always insist, YOLO or FOMO, they're young. What if they ain't? What if they didn't? What if they had money put aside or money that they saved or took some out their 401k or whatever, that had motivation before? And they do remember the past, but they have got money.
We remember.
Yeah, exactly. Millions of us must. And they got knowledge or experience or an anger, and they were just waiting for an opportunity. An opportunity for payback. I talked about it. January, as soon as I see it, payback with what I'd learned or understood or looked at before. There was a chance of payback. Did I YOLO in? Did I, FOMO in with every? Of course I didn't. Did I use credit cards? Of course I didn't. A very, 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 very small percentage might have. And I hope they're good, and I hope they got by, and I hope the job hasn't been lost or worse. So what if it was the people, and we talked about it loads of times, I'll never stop talking about it, 2008, it was the last crash. Why would I? We're in the position we are at the moment with everything you said, Boss, and everybody else, and everything that's going on, and we're all paying attention. We're a lot within the movement. If you pay attention, you've got the time to read up on the documents, etc. We know what we think's going on, and we know there's Dalios and Burries. But what if it weren't just the people like me who knew about 2008 and the VW? Yeah. The cash and the banks being bailed out. What about the crypto millionaires? How many of them are in the play? The people that were in it when it was very first. They were, might have been young enough, they were sat in their mum's house, got their own computer and they got it mining, got a few Bitcoin that way. There was over 3 million lost Bitcoin to this day. Mm-hmm. And they were figures that came back from 2017. But what if it was crypto millionaires? How many people made significant money in Bitcoin and crypto and see this as an opportunity? And it's in keeping with Satoshi Nakamoto's white paper. The moment I read that white paper, and that was 2016, I instantly loved Bitcoin. I instantly loved blockchain. You're telling me there ain't other people out there that don't feel the same way? Because of the white paper and the reason and the time that he released it. The reason he released it was because of the financial system and the crash and how it will always hurt everybody. So it was an opportunity for people to step outside, get away from the constraints of the banks. So Bitcoin alone, there's an article, CBS News of all people, but get your facts where you get your facts and then go and have a look. February 23rd, 2021, they reported that there was now as many as 100,000 people who had $1 million or more stashed in Bitcoin. And according to the cryptocurrency data tracking firm BitInfo Charts, that's up from 25,000 Bitcoin millions 3 months previous. So February went up fourfold. What if they sold and bought? The year before that was only 15,000. So could some be people who knew about overstock? Toys R Us, we've all talked about it. It's not new, but think about the psychology, the people behind these stories, these companies, employees or family, or what about them? Could they have bought? And then what about the people who lost their 401ks or their jobs or their family? How many millions of them are out there? Could they have bought stock? Merely as a chance of payback. And do you think they need social network? Do you think they're worried about a few people, peripheral, that are arguing, that are going to sell because we're having it don't faze me. It's peripheral. It's not going to change anything. It depends what people's motivation was when they first got involved. And seeing as they're all still here, Adam Aaron says 2000 and, what was it, last year, 2021, 80%, then really proudly 90%. We talked about that before. Ain't come out since and said it's 40. So do these people, the people I've just mentioned, people that have come for this, crypto millionaires, think they're bothered about 50 grand, 100 grand that they put in? But if they can stick it to the man, because of what Satoshi said, someone who lost their house, someone whose family suffered, their mum and dad might have suffered, do you think they need to be told? A fact, as of June 30th, 2021, 60 million people. How many Americans have 401ks in 2020? There was about 600,000 401ks.
Call your mom.
Or 401k plans.
Call
Big
your dad.
amount.
Call your friends.
And about 60 million active participants, and millions of former employees and retirees are tied into the pensions. That come off of ICI.org. Go and have a look. The Great Recession that started in 2008 brought a housing crisis in which over 6 million American households lost their homes to foreclosure. That's off of the law.nyu.educational news. 6 million in America alone. What if they see GME? What if they learned a little bit? What if they jumped into Reddit and did a bit of DD and the research, started checking out the facts? So again, what about the people who lost everything because of a crash? And they might have seen IBKR, what Boss has shown you, what happened at the time. They might have seen him on TV and the panic and what he actually said. Do you reckon they need somebody to tell them, oh, Occupy Wall Street? I honestly think this is now the 2021-22 Occupy Wall Street. It's, for the most part, polite, for the most part, respectful. We use humour. We bounce off each other. We turn to each other, you know, we have highs and we have lows, we have good days and bad days. But it's like Occupy Wall Street, but without walking down the street, without going outside Wall Street. We all remember that woman in purple. Now they're coming out and saying, I've seen, that they want to say that it was somebody having a party. Well, for us, you're missing the point. It was representative of what we know. We remember Kenny coming out and saying, when he was saying about the teacher's pension, We've seen Gasparinos, we've seen the experts come out and talk the way that they talk. We've seen people be dismissive of people's lives ruined. So then people did. They're missing the point. That picture signifies whether it was people that worked or out having a meal. It doesn't matter. To us, it represents what we know and how they feel. Do you reckon anyone who sees that or thinks that is going to need motivation? When Occupy Wall Street, I've done it. I've been on marches in Brussels and London. London was over 600,000 people. The BBC and the news channels in the UK never covered it, never showed it. Occupy Wall Street wasn't covered. But I found this. The US press seems to have decided that the Occupy movement is no longer a story. Pretty much, no matter what we do, in New York on May Day, something between 50,000 and 100,000 people marched through the streets. We don't know the exact numbers because most papers didn't report the event at all, and therefore didn't bother to make estimates. In California, there were blockades and walkouts. In Seattle, one band of protesters relived the famous Black Bloc actions of November 1999, smashing many of the same corporate windows, and even that didn't make national news. The source of this is the Guardian newspaper in the UK. So when I keep looking and little people want to have an argument and we keep getting told that everyone's selling, do you think any of them, if they know about this, bought this, have sold because of what mainstream media and everybody else is saying, or these arguments that we're getting on Twitter?
Speaking of these arguments that we're getting on Twitter, you know what? After the January 28th, 2021 run-up of AMC and GameStop, in which they both, along with costs, were made position close only, so that retail investors could no longer buy them by the majority of the largest broker dealers. The overnight repurchase program, the reverse repurchase program, also known as the reverse repo, was at almost zero. On January 22nd, 2021, it was at 0.00 billions. So nothing almost. And it started to increase a few days later after that, and 30 plus 35 days later would be right around early March. You could see it started to climb up. It got to $6.8 billion for the first time in a long time, after being at nearly nothing. That was the beginning of a liquidity crunch that has been being pushed off since that run-up itself. And even further, it's to the point now where we have had an all-time high now of $2,425,910,000,000 in money being stored on the reverse repurchase program, because this is being used heavily by money market funds and other sorts of institutions. 103 participants today. We had 103 participants today on October 12th, and there was $2,247,206,000,000 traded today, with a 3.05% APR interest rate that's paid to the banks and these money market funds and these institutions. This is being done because they're very well aware of the long-term treasuries and the fact that all of the new regulations, such as Phase 6 and so on, and their bad collateral like Evergrande and the executive orders, etc., a lot of this stuff is negatively affecting them, thus forcing them into holding more and more cash at any time to maintain their short positions. These short positions, these liabilities, notes, debentures, net deferred tax liabilities, interest and other expenses accrued and unpaid, accounts payable, liabilities for short positions, derivative contracts with a negative fair value, and other trading liabilities to which fair value accounting has been applied, are being held almost exclusively by the top 4 banks of the world, which are, basically JP Morgan, Wells Fargo, Goldman Sachs, and Citibank. And these are some of the largest players, and together they have and hold 89% of all notional derivatives liabilities in the banking market, out of over 1,259 or so, approximately, insured holding companies and banks in the derivatives market. And they owe trillions and trillions of dollars on these short positions, derivative contracts with negative fair value, etc., everything I just mentioned. When you have market collapses and lacks of liquidity, it equals margin call defaults. Not just ones from the DTC, but between prime brokers and broker dealers and family offices and hedge funds and everything else in between, to the point where even if the DTC doesn't margin call them, they're going to be margin calling each other. That's why it's called volatility, because it's unstoppable after a certain point.
Yeah.
Yeah, brother.
Of God type stuff. Exactly. Fire and brimstone coming down from the skies. Rivers and seas boiling.
40 years of darkness, earthquakes, volcanoes.
The dead rising from the grave.
That's awesome. That's why I wrote this particular due diligence over a year ago. I posted it on August 3rd of 2021. And almost everything, with the exception of the debt ceiling collapse, which that can got kicked until this year, and we're nearing our debt ceiling again, has come to fruition. Damn, we're gonna be fucking rich. Check this out. This is Aaron Brickman. Aaron Brickman, he was on Man in America on YouTube, and I'll make it quick. Basically, this man has been studying market crash, like 40 years worth of market crashes for a long time, and he has come up with something that we've seen happen multiple times. And the fact that it correlates, market crashes correlate with the moon cycles plus 28 days. And just oddly enough, that is exactly 30 days before the T plus 90 date of AMC. The T plus 90 date of APE, for those of you that are unaware, is when broker-dealers get the option to margin call, basically, and force close the positions of shorts that failed to deliver the APE, AMC preferred equity units. That date falls around November 24th or so, and the 7-year crash plus, I think it's like 7 moon cycles plus 28 days. Aaron will explain it a lot more eloquently than I can. It's short, but you will want to see this. Basically, that equals around October 22nd to 21st through 24th. That's almost exactly 30 days before the APE, T90 date. In addition, back in 2008, when Volkswagen ran to its all-time highs, and that pretty much that was exactly 30 days after the September 28th market crash, I believe it was, where the market crashed the most at its worst in one day. And on October 28th or so, that's when Volkswagen hit its all-time highs. Granted, Volkswagen and Porsche did make a deal with the government, basically, but they were only one investor, and they held the majority of the shares, but not enough to take over. However, in AMC, there are over 4 million retail investors, and they own 85% of the float, not to mention 90% of the float when you include ETFs. In addition, you got to take into the short interest right now is around 20%, and then institutions own another about, I think, 25 to 30% as well. So the numbers just don't add up, do they? That doesn't include synthetic. It doesn't include synthetic shares, naked shorts, married puts, married calls, divorce puts, divorce calls, shorts marked as long. It doesn't include rehypothecations or wash sales or when spoofing occurs, and so on. It doesn't include derivatives. It is the contract.
Yeah, man. We're one hell of a run.
He came
You ain't
along,
lying.
and his name is Steve Pitts. And what
Professor from Hawaii
he
came up
discovered
with
was
this.
that all the crashes, the panic portion, and let's be specific about crashes. Crashes are where you're at a high and you go to an extreme low in a very short amount of time. When I say a short amount of time, we're talking 40 to 44 trading days. Okay. And what he demonstrated was that the panic portion, so we'll talk about the last 3 weeks, which is really where the panic sets in. So we're talking the last 13 to 15 trading days. That those panics are all triggered by a full moon that occurs, it's triggered by a full moon that occurs within 6 weeks of a solar eclipse. Okay. And so in June of this year, when people were calling for a crash, I was saying there's no way we can crash. Well, why not? Well, we're not even near a solar eclipse. So, and I've back tested his stuff, and his stuff goes back to the 1800s. I think I've looked at 8 or 9 crashes in U.S. history, and you'll always see that signature there. So now you've got 2 of the. Go ahead.
One thing
Seth.
I want to ask quickly with that is, I know that there's a lot of folks that they say, they don't want to look at astrology, look at, to the,
Right.
It's almost like it's a pagan approach. And
Right.
I'm not going to get into that.
It's not about
discussion,
paganism.
but
It's not about astrology.
I've
it's
heard you make a
mathematics.
point that and I've experienced this too, the moon controls significant amounts of activity on Earth. It controls even our emotional states. You'll find that, they might see more crime during a full moon. Teachers might notice that the kids are more out of line during a full moon because moon, even just from a very scientific standpoint, affects it has a gravitational pull to it, which is what creates our tides coming in and out, as an example. Now, the human body is mostly water, so this does affect us. And I also want to point out, just for the listeners and the viewers of this show today, that it's not about like divining the stars. It's more about looking at patterns and saying, well, this particular event that happened, say it happened on this day, it happened once every 10 years for the past 100 years. It's more like saying, well, on that particular day, there was always a tornado that hit, within 100 miles of that happening. And so it's not like you're looking for the tornadoes to show you what's going to happen, but you're saying, well, look, it's happened 100% of the time in this particular pattern, then it's showing us something, right? And so I think that's something I really learned from this and learned from listening to you. It's about looking at these patterns over the course of history and developing an understanding of what there's a pattern, there's a mathematical pattern, and there's cycles as well. So I just wanted to just put that out there for the audience, that this helped me really to understand where you were coming from and where you're going.
Yeah, I think in the 21st century we try and get to intent. We try and ask the wrong questions so many times. Where the ancients, they didn't have a clue. They just recognized, hey, this happens every time there's a solar eclipse. Oh my gosh, they're figuring out a pattern with the moons, and they might make up mythology to try and explain that and pass that down over the centuries, but I don't care. I don't care why it works if it works, and I'm not trying to. I'm definitely not into astrology, and I told people, besides some of the moral implication, I'm not that smart
either, really.
And I can't remember all that stuff. I just am looking, really, what this is it's pattern recognition. The charts are pattern recognition a lot of the times.
Yep.
And you're seeing the ancients do that when you're talking about celestial events. Okay. I'm not going to ascribe any type of meaning to celestial events, whether that's good or bad. I'm just saying, for the purpose of trading, I'm not looking at trying to interpret intent or cosmic meaning. I'm just noting if every single crash in the last 100 years has this present, I guess we got to look
crash for the last 100 years. That's hard to deny.
So, and I think we see that in science all the time. We see science where they can't explain a lot, and in fact, they can't explain a whole lot into that Mars-Uranus cycle, literally in December of 2021. And as soon as we did, the markets began to go down. They did that same pattern in 1929 as well.
Here comes a fun part.
That Mars-Uranus cycle is concluding in December. And so, as far as it relates to my understanding, I've been telling people, so a lot of people are calling for a 2023 crash. And I'm like, anything's possible, but looking at the last 100 years of market history, if we're going to crash, we need to be crashing between now and December, when that Mars-Uranus opposition concludes. And then I guess one of the last pieces, there's two more pieces I want to talk about. The last piece is the Saturn-Uranus square. Now, this is a big deal. This happens every 45 years. So this is not, a monthly new moon, full moon type of configuration. It's a 45-year cycle. In 1842, we had a Saturn-Uranus square, and that was the bottom of the 1836 to 1842 depression, stock market crash and depression. That's with Andrew Jackson and the dissolving of the second bank. The markets lost 80% of their value in a short span of time, 80% of their value, and they bottomed at the Saturn square Uranus. You go forward two more of those cycles, and it is 1932. 1932 saw the 1929 to 1932 depression, and the stock market bottomed again at the Saturn-Uranus square in 1932, and it was a 90% collapse in the market. You fast forward another two cycles, 90 years later, and it is 2022. We are having a Saturn squaring Uranus again this year. And as fate would have it, we are having it is reaching within 1% of a perfect square aspect, which means it's going to be at its peak power from Monday, October 3rd through Thursday, October 6th. So we are in it right now.
He called it.
Okay. Now,
During the FOMC, market started
that
taking
is
a downturn
due
again.
to bottom in November. What that is saying is that in November of this year, whatever panic comes to the markets should be concluded based upon the 1842 and 1932 cycle. Now, Peter Alades, who was on Wall Street, I love the guy. He's still around. He still has a service. He's awesome. He's super smart. He came along and noted about a month ago that there is a 40-year cycle that is going on in Wall Street from 1840 or from 1942. So from 1942 to the bull market beginning in 1982, it is now coming, and it is due the third or fourth week of November this year. So now you have a 90-year, or you have actually a 45-year cycle with Saturn, as well as a 40-year cycle that is due, and they're both due in the month of November.
Ooh,
so there's a number
wow.
of cycles and
Surprise.
celestial events that are saying that if there's going to be a crash, it could be a very significant crash. That's one thing to note, okay? And that it should be concluded in November. And then the last, so that's, I think, what are we working on, like 4 digits? The 5th digit of this,
There's a lot of layers.
and this is the one that I'm
It's a lot of signs.
This is the one I've studied the most because it's just so obvious. And that is the Jewish high holy days
The
on the
Shemitah,
calendar, which
the Yom Kippur.
most people are completely oblivious to, A, because they're not Jewish, and B, because it's a lunar-based calendar. Okay, so it's not showing up. And because it's a lunar-based, people, that means that these dates each year are shifting around. Okay, they're not going to be stationary, and they can shift by weeks on these calendars. Okay, so for example, 1929. Here's how a crash takes place.
Listen up.
You're at a high. You have what's called in Elliott wave terms a wave 1. That means you have a very large drop. Usually it's anywhere from 8 to 17%. Okay. And that gets people's attention. You then have what's called a wave 2, where you do a retracement. It's usually a Fibonacci, which is a mathematical formula. It's a Fibonacci retracement, and everybody thinks everything's okay. And then you begin to roll over, and you go right back down to that low. And it's at that low that not all crashes emanate just because you follow that pattern. I mean, we get this all the time in the stock market. It's with the stuff that we just talked about. If that's all present, then those conditions are ripe where you could get a really extreme move to the downside, which the public knows as a crash. So in 1929, obviously we had that. We had a 17% drop. We had about a 50% retracement, and then we began to roll over and go down. When we went down, we literally stopped at Rosh Hashanah. Now, Rosh Hashanah is on the religious Jewish New Year. It's the religious Jewish New Year on their calendar. Okay, and we rallied all the way into Yom Kippur. Okay, and then we crashed. And you're going to say,
Well,
so
look at
what?
that.
Well, we did the exact same thing in 1987.
No kidding.
We went down. As soon as we hit Rosh Hashanah, we stopped. We rallied. As soon as we hit Yom Kippur, we began the crash.
Yes, sir.
Okay. In 2008, and I was trading that, there was a massive curveball that came our way. Probably messed up a ton of traders.
Yeah.
And that is that we did not rally from Rosh Hashanah to Yom Kippur. We crashed. Okay. We literally began the crash at Rosh Hashanah. So that is present. Obviously, it's present again this year, and it's not just that it has to be present. And this, I know there's no way I can explain this on air. I'd have to actually visually show you. But you have to get day counts in moons and solar eclipses and Jewish calendar and these planets. You all have to have them in a configuration, a very tight configuration where what we called Elliott wave actually fits, where you can have your down move into Rosh Hashanah, you can then have an up move into Yom Kippur. There's a full moon nearby. There's a solar eclipse nearby. The Chris Carlin's dark days are right on schedule. This is very it's a complicated dance to get all these technical formations together so that you can trade a crash. So here's my little claim to fame, I guess. I guess I did that August 25th. Okay, so and what I mean by that is I had looked at this and was super excited about this year because of all these alignments and formations. And look, you can see this and study this before you ever get to September, October, which is the seasonal time for a crash. So I can look 5-10 years into the future, look at the planets, look at the calendar and go, yeah, there's possibly a crash, or absolutely not, it can't happen. And so I did that this year, and what I've said is, it's not that you're just going out and every year you're claiming there's going to be a crash. Context is everything. And the context was January through June. That was your context. The context is we were at an all-time high, and then we lost a tremendous amount. I mean, we've wiped out over 40 trillion in assets, and we went down into June, and now we've come back up into August. Okay, so that's your context. Your context is
that's huge.
Is a crash possible? And everybody's like, oh my gosh, it is possible now. Okay, so in August, on August 25th, I was interviewed, and I kind of laid out what had to happen if there was going to be a crash. And I'll lay it out for your audience right now, because I think this is the thing that people are most interested in. It's not necessarily even how I'm doing it, how I'm coming up with all this stuff. It's it's really what comes next based upon what I've been able to do so far. And let me, for the audience, indulge me for a second. I'm not clairvoyant. I'm not the smartest guy in the room. There's other guys that probably know what I'm saying. Nobody's writing about it. I will assure you of that. You're not going to find articles. You're not going to find books. This is worth its weight in gold. The traders out there that are listening, this is worth its weight in gold. And if you will spend as much time, and Seth, I've counted up, I've spent thousands of hours. I kid you not. My wife will test. I'm still after I've studied the 08 crash in comparison to the 29 and 87 since 08. And even last week I was finding more. The math to me is the fingerprints of God. Math is this whole universe has been ordered. Your whole body construction. I dare say, and I know this will cause some people to get a little ruffled, I'm telling you, your life events are there is a mathematical equation to your life events. I kid you not. Okay. I have found the mathematical equation in my life. Okay. I believe it's different for every single person. Okay. But what I did, all right, this is something new for your audience because I haven't told anybody this. So I knew about cycles. Okay, so there's cycles. There's tons of books on cycles. This is nothing new for hundreds of years. Okay. And so I was sitting there one day and I'm like, well, if there's cycles to earthquakes, if earthquakes have cycles, if pandemics have cycles, if the markets have cycles, if there's war cycles, what's the cycle in my life? Like, I wanted to know, is there that would make sense. It would follow. Okay, I thought it was logical. You guys might think I'm crazy, but I thought it made perfect sense.
So I got a spreadsheet out and I just started. I called my mom and my mom thought I was crazy. And I'm like just peppering her with questions like, when did we live here? And when did we move? And what were the significant events growing up? And what were the exact dates? And she's like, what do you mean the exact date? I'm like, I want to know the exact date. Like, don't give me the month. I need to,
I love this guy.
I'm searching for something. And I'm only looking at major events. We're only looking at very major events in a person's life. And there's definitely patterns. I'll just leave it at that. There's definitely patterns. And this isn't foretelling the future, and it's not that on a certain date at 5 p.m. something event is going to happen, because again, we're dealing with cycles, and cycles are not precise.
That's right.
Anybody that knows about cycles will always know there's variance. Okay. So when we talk about the war cycle in the United States, we have 1776, and 80 years later is the Civil War, and 80 years later is World War II, and 80 years later is right now. Okay, but we're not talking about it to the very day. We're cycles. There's variance.
Exactly.
That's life. And so, anyways, that's a little bunny trail. If that excites somebody to start thinking differently about their life.
The reason why they threw Martin Armstrong in prison.
See, this was an absolutely phenomenal interview here.
Where you could, it's like, okay, this happens once a year, that happens once every 3 years. And so mathematically, there's a 5% chance of this. And from what you're seeing, what are the mathematical odds of everything that you've seen all lining up on this one time period in history?
The odds are so remote as to make you believe in God if you just look at the math. It's and again, because we're talking, look, it has 2008, 2001, 97, 87, 29, and then you go into the 1800s. I mean, we're not talking, this is not every recession. This is not every bear market. I don't care about recessions or bear markets. We're looking at crashes. We're looking at panics. Panics until we got into the last 20 years of Fed policy. Panics used to be a very rare thing. Okay, we seem to be producing them every decade now, since we, think we're so smart to manage the global economy. But yeah, if you're looking in the 20th century, you're talking 3 times. This is big. I said it on Hagman's program. This is big wave surfing. This is not, hey, we'll go down to Venice Beach and there's always going to be a little wave. We're talking 70 to 100 foot waves. We're talking, storms of the century. Okay, this is to get conditions like that. You have to be at the right place at the right time with extreme conditions to get that type of storm. Okay, and that's what we're talking about. So where are we at? That's what. So in
Aaron,
August,
if you don't mind, do you mind if I ask you? That's what I was going to actually jump to. Ask you to explain the August onto September 23rd, and then even what you and I had talked about over the weekend, where you told me almost exactly what was going to happen in the markets on Monday and Tuesday this week, which is what happened. So why don't you kind of walk us through that and then basically paint the picture of what you think the next couple of weeks could look like for us.
So here's my disclaimer. My disclaimer is past performance is not indicative of future performance. So what I am going to describe was the easy part. We'll get to the hard part. So the easy part was we had a January to June drop in the market. It was significant. Everybody knows about that. Okay, that's ancient history. We then rallied into August 16th. That was right on schedule. Go check out 29, 87, 08. It's right on schedule. You always get a summer rally. All right. We topped on August 16th, and
I'm going to link this video below. I'm going to let it keep playing so you guys can watch the rest of this. But it's a little long, so I'm not going to play the whole thing, but I will link it below for everybody.
on August 25th, I was on Doug Hagman's program where I laid this out for about an hour and a half in detail. And I said, look, if this theory is right, and what is the theory? The theory is that we potentially could be facing the storm, I called it the mother of all crashes. We'll get to in a second. That's a hypothesis, not predicting. I had a hypothesis. So like any good scientist, if you have a hypothesis, you need to set up tests, and we're going to test this theory. There's going to be lots of tests along the way before we can come out and say it's a rule or it's a law. Okay. So the hypothesis was we were at 34,250 on August 16th. On August 25th, we were at like 33,200. And I said we should be at the June lows, which at the time was it like 29,500? We'll be at 29,500 by Rosh Hashanah, Friday, September 23rd. And I went another hour and a half and I laid out the case of what should transpire. So we closed at 29,590 on Friday, September 23rd. So I guess a couple of people thought that was cool. But that was the easy part. And when I say it was the easy part, I kid you not, that was like kindergarten stuff compared to what we're going to get into. Because you always go back and retest the low. You have to retest the low. So we went back and we retested the low. Then I said, according to what we just discussed, there should be a rally between Rosh Hashanah and Yom Kippur. That's stage 2. Okay. Now, this one was a little tricky, and I got to be honest, this, in 29 and 87, as soon as we hit Rosh Hashanah, we started rallying. We did not do it this time. Now, we stopped. We just kind of oscillated back and forth for about 3 days. It was at the support level. It was very touch and go. But we were still within that band. We got to rally into Yom Kippur. Yom Kippur is your final rally. This is your rally. This is the rally of hope. Okay. And so when you get to Yom Kippur, both in 29 and 87, all bets are off. We're crashing. Okay. Now, when it got to Friday of this week, and I all week on Twitter, all last week, all week last week with my friends, people are like, you still believe it's going to rally? And I'm like, anything is possible. Anything is possible, but the only thing I have to go on is history as my guide. Okay, I'm not clairvoyant. Anything's possible, but you got to stick with the past, okay, that we just discussed. I did note last week that in 1929 and 1987, we rallied from Rosh Hashanah to Yom Kippur, and it took the entire week. I haven't seen a week-long rally since 1987. And that's what I began to notice in the charts, is that in the 2008 rally, we did it for 2 days. Now, we did 11% in 2 days, which is insane. And I was trading that in 08. And I will assure you, if you think the market is volatile now, try an 11% rally in 2 trading days. It was bonkers. Okay. And then we crashed. In 2020,
and then we crashed.
We did the same thing. If you'll go look at the chart in 2020, you'll see it wasn't 2 days, it was 3 days. You'll see a 3-day, I think it was like 9.5%, 10% rally.
There you go.
3 days. And then you immediately went into the crash. Okay. So I noted that over the week.
All right. I'm going to stop it right here. You guys make sure you check it out. It's called Is the Worst Market Crash in History Just Weeks Away? It was an interview with Aaron Brickman, and it was on Man in America YouTube channel. Excellent interview. It's about 2 hours long. If you guys want to hear more, I'll drop it in the chat in the comments for you here right after the stream, and I'll drop it in the chat right now so you guys can have it if you're watching the live stream.
Sacrifice, dogs and cats living together, mass hysteria. Enough, I get the point.
That's pretty much what we're getting at. Yeah, enough. There's a hot mess out there, and there's a lot of issues that need to be solved. Long story short, look into this because you never know what's going to happen tomorrow. History doesn't repeat, but it often rhymes. On that, I wish you peace and wealth. Thank you, everybody. Have a great day. Thanks for your support. Frito.
Mr. Marcel.
What's up, Pantheon? How are you?
Good. Do we have a minute to talk about SEC rules?
Please do.
Okay, folks. How's everybody doing? So
Great.
what we've got here is a story that's come out today about how there's people set up ready to sue the SEC. Okay? And we're going to tie this back to 12 SEC rules that people need to take some time and put in their public comments on. And this goes back to 2021. I won't take very long. But there's a story out today about how Gary Gensler is set to launch a regulatory broadside in the coming weeks. And we've got 2 weeks of public comment for 12 different proposals that have been in the works. You guys have been hearing people talk about all these SEC proposals for a year now, year plus. People have been saying nothing comes of it. This is why nothing's come of it yet. So what Gensler's looking at doing, this is not a pro-Gensler piece, but he had an interview with Jon Stewart that came out today. So this is going to help kind of pull all this together. So watch that interview, but also they're looking at spearheading revamping of the stock market's plumbing, partly in response to the whole meme stock saga, right? Which when Robinhood and other brokerages attracted scrutiny after they were overwhelmed by trading of shares in companies like GameStop and AMC. Nothing everybody doesn't already know. The proposals have yet to be released. I'll go over all 12 of them real quick. But industry executives have already begun talking about suing the SEC over these plans. Now, that doesn't sound like something you would do if it was heavily on their side, okay? Them being shorting hedge funds and market makers, etc. So right now we've got this bid to revamp the structure of the stock market is getting people like Ken Griffin, Robinhood, we got Charles Schwab, they're Citadel, they're lining up here for potential lawsuits on the SEC. So what came out Friday was a piece of information that 12 different SEC rules are currently up for new public comments. And how they've described it is that the SEC reopened public comments for 11 rulemaking releases and 1 request for comments for a new one based on a technological error that resulted, or glitch as we've come to know them, that resulted in a number of public comments submitted through the internet system that we put in not being received by the commission. Up now for new public if the comments. SEC was looking to just push these rules through and they weren't in our favor, they would have just done so. And I'm not singing the praises of the SEC, but I'm saying the SEC did not receive all of the public comments, and they have thus now put these rules forward and said, please re-comment. We're going to keep them open for 14 days starting on Friday, is my understanding of the time. Now, the affected releases, December 8th, 2021, reporting of securities loans. February 4th, 2022, prohibition against fraud, manipulation, or deception in connection with security-based swaps. February 8th, 2022, money market fund reforms. February 15th, 2022, share repurchase disclosure modernization. March 16th, 2022, short position and short activity reporting by institutional investment managers. March 23rd, 2022, cybersecurity risk management strategy, governance, and incident disclosure. March 24th, 2022, private fund advisors, documentation of registered investment advisor compliance reviews. That one goes back to Darkpools and alternative trading systems.
Yes.
April 11th, 2022, the enhancement and standardization of climate-related disclosures. May 13th, 2022, special purchase acquisition companies, shell companies, and projections. Only 3 more. June 17th, 2022, investment company names. June 17th, 2022, enhanced disclosures by certain investment advisors and investment companies about SEC or whatever, ESG. Yeah. And June 22nd was the request for comment on certain information providing providers acting as investment advisors. This stuff has all been reopened for new public comment periods because they didn't receive all of our comments. This is the stuff we need to jump into the SEC site and start commenting on.
Yeah. I think you're absolutely right. Could you drop a link when you get a chance and I'll share it or drop it into the chat, or share it into Discord, and I'll drop it into the chat, and we'll put it in the comments down below on YouTube, please. If you
Yeah,
get
the
a chance to
article.
grab one.
The article was from Politico. That's dropped in the chat. I'll drop it in
right.
again fresh for you.
Great,
and then
thanks.
the same thing as the links to all these. I'll throw them in the ape chat right now.
Awesome. Thanks very much for that. Appreciate you, Pantheon. Yeah, it's very important that people actually go out and comment on these if you can. It would be very helpful. The more the better. Every single person counts. It's like almost like votes, if you will. So I think it's really important to comment on these SEC regulations, and I know I will be doing that as well, because it matters to me, and not so much, even not being as selfish as just myself, but to other retail investors, and then my children, and those other retail investors' children's, and in the future, So if we can't rein in the markets now, it's never going to happen. This is our time. This is our time. The rise of the retail investor. Cheers, everybody. We're going to be so fucking rich. Have a great day. Wish you peace and wealth.
Cheers.
Cheers, brothers and sisters. We're going to the moon. Jerome Powell's got to get that money printer out, bro. I'll tell you that much. Because he's going to have to bail out all of these brokers. All of these prime brokers, the banks, the broker dealers. They're going to need massive bailouts. We're going to get ours as far as I'm concerned. I can't see the future, but you guys have seen that I'm more than willing to invest my money into it because I think that it's a great fucking investment. But just like very much like DFV, I find great value in AMC and GameStop. And they're worth a lot fucking more, just fundamentally, than their actual stock price, in my opinion. So, that being said, I wish you all peace and wealth, everybody. Thank you for your support.
Thank you, boss. Thank you, everyone.
Thank you, Wolfie.
Thank you.
You guys are awesome. Thanks, everybody. Appreciate all your support. So goddamn rich.
I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Getting fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Great. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't
yelling,
you?
cowboy. Give me the fucking money. Get the goddamn money printer out.
Great. Bounty cutter.
We're gonna be so fucking rich. Get the goddamn money printer out.